Hi guys, welcome back to my YouTube channel. Today we've got a fantastic video and it's all about limited company expenses. Whether you're a small business, a property business, all of this applies to you. So make sure you watch the full video so you can see exactly what expenses you should be claiming and getting tax relief on this year in 2021. But before we kick things off, please do hit that like button so I know you guys are enjoying this content and I know to keep doing more of it. So, expenses, what are they and how can you claim them and how can you get tax relief on them? So the first thing to run through really is what is tax relief, because when we speak to people they often say, yeah, I can claim these expenses back, and a lot of people do often get confused as to what that actually means. Who are they claiming these expenses back from? So claiming expenses back, what this means, unless you're VAT registered, where if you're VAT registered you reclaim the VAT on any purchases you make. So if you've got 20% VAT on something, you reclaim that back. You actually get that cash back from HMRC as part of your VAT return process. Of course, if your outputs are more than your inputs, you still have VAT to pay. But talking simply in terms of normal day-to-day expenses and tax purposes, if you were to look to get tax relief on something, you don't claim anything back, but what happens is that these reduce your profits, and of course your profits are charged to tax. So if you've got £10,000 worth of income, £5,000 worth of expenses, it's only that £5,000 profit that's left over which is subject to tax. So that's what tax relief means, is that basically because these profits are reducing your profits, because these expenses are reducing your profits which are chargeable to tax, that's what tax relief means, in that you're getting a tax deduction for those expenses. So how can you pay for expenses for your limited company? So there are a couple of ways you can actually pay for day-to-day expenses. The first and most obvious is using the company bank account. So if your company's got a debit card or even a credit card, you can use this to pay for the day-to-day business expenses, and obviously usually to keep the receipts. But if you've got your own personal bank account that you're using with your personal credit card, I've spoken before about using an American Express and other credit cards to collect air miles while spending money for the business. If you're doing things like this, then you can actually reclaim that money from the business as a normal expense, as you would if you were working for somebody else. When I used to work for somebody else, we used to keep all our receipts, put them in, and then they'd be repaid to us. The exact same principle works here with your own limited company, is that as long as you've got the receipts, you put them in, and as long as they're incurred for the business, you can get those repaid to you. They can go to your director's loan account, or you can actually receive the cash back. So as a limited company, how long must you keep your records for? The answer here is 6 years from the end of the tax year in which the invoices or receipts or bank statements relate to. The reason for this is that HMRC have this long to open up an inquiry into that tax return. So if, for instance, you throw them all away all at the end of your financial year, you've done your accounts, you paid your tax, great, you're throwing your records away, they could come 2, 3, 4 years later, open up an inquiry into a single aspect of that. And if you've not got the supporting paperwork to support your position on that, there might be extra penalties or extra tax to pay unless you can convince HMRC otherwise. And the best way to convince HMRC is to have the third-party evidence in there, all of your receipts, your invoices, your supplier payments, your remittance slips, your bank statements. So you need to keep all of that for at least 6 years from the end of the tax year in which it relates to. So accountancy fees, how do you claim these? Accountancy fees, well, if they relate to the company, so they're wholly incurred for the purposes of the company, then they're fully allowable as an expense. However, if there's any benefit to you personally, so if you're doing your self-assessment tax return, then what this actually is, it's classified as an employment benefit because it doesn't relate to the company, it relates to you personally. So if the company pays for that for you, you'll pay Class 1A national insurance as its benefit in kind. Otherwise, the money can go to your director's own account and be paid for from there. Other expenses include accommodation costs. So as long as you're travelling for business purposes, you can claim the costs of the business travel. One thing to note there, it does have to be in line with your role. So for instance, if you're a director earning £50,000, £100,000 in profits, and you were to then try and stay at the Ritz every single night where you're paying £2,000 for the suite, this would be deemed excessive. For HMRC might challenge this, so it must be in line and must be reasonable fundamentally. So it needs to be in line with expectations. £150, £200 a night shouldn't have any problems. But if you are looking to be if you're looking to be excessive and you're staying at the best hotels and trying to put it through the company, you might have some bother there with HMRC. So other expenses might include advertising, marketing costs. They're all directly relating to the business. You spend that money to make money, so that's allowable. Bank costs as well, so if you've got finance costs, bank arrangement fees, loan interest, all of those expenses are definitely allowable. So business insurance, if you've got any insurance policies, whether that's public liability insurance, any of the professional indemnity insurance, all of those day-to-day expenses that you incur are fully allowable in the business, and you will get tax relief on those. So business mileage, this is a big one. So business mileage, the way it's actually deducted depends on whether it's a company-owned vehicle or if you're using your personal vehicle for business purposes. So we're going to run through here back on the assumption that you're using your own personally owned vehicle for the benefit of the business. And it's quite simple in that we claim 45p per mile for the first 10,000 miles. Anything over and above this, you get tax relief at 25p a mile. So if you've done 10,000 miles during the year, you do need to keep a detailed log of this. There are apps available such as TripCatcher, MileIQ that do make this easy. If you've done 10,000 miles, that's £4,500. This is allowable expense as the company, it'd be under travel expenses, £4,500. Then the company can either repay that to you as cash, or it can go to your director's loan account and you can take the money from your limited company at a later date. Other types of business travel such as taxi fares, train fares, parking costs, hotels as previously mentioned, all of these travel expenses you can claim for business purposes. If you paid for them personally, make sure you keep the receipt. Otherwise, pay for it on the business card, and that's a fully tax deductible expense. So entertainment expenses. Entertainment expenses where you're entertaining clients, this is not allowable for tax purposes. So what this means is you do not get any tax relief on entertainment expenses. HMRC specifically disallow this. So what would happen is when it comes to calculating your profits, that business entertainment expense doesn't get a tax deduction. So in that similar example, £10,000 profits, £5,000 expenses. Whereas we now know that in that £5,000 worth of expenses are £1,000 worth of business entertainment, that won't actually be tax deductible. So what will happen for corporation tax purposes is your allowable expenses will be the £4,000, meaning £6,000 of profits will be chargeable to tax. If you are giving gifts to your clients, they can be allowable as long as they've got your company logo on them, they cost less than £50, and they're not food, drink or alcohol. So gifts to your employees, they may be allowable for tax purposes as long as they're a trivial benefit. So for it to be a trivial benefit, it needs to cost less than £50. It cannot be in reward for work or services performed. It can't be contractual, and you can't be able to redeem that voucher for cash. So if you've got an employee, it's their birthday, Christmas, Easter, anything like that, you've got that kind of spontaneous event and you want to do some good and spread some joy around your office, you can give people up to £50 in a voucher or money. Basically spend £50 as long as you get a receipt, give that to people, and there's no tax issues on doing that. So fundamentally you can go to M&S. This can actually include food, alcohol, so you could basically give them a nice bottle of wine, some flowers, just because it's their birthday or the sun is shining. That's what it's there for. So mobile phones, as a limited company, if the monthly line rental, so if you've got a SIM only plan or a contract, if that's in the name of the limited company, then that's a fully tax deductible expense. And if you've got you'll add one phone per director employee. There's no taxable benefit that arises, so it's just purely tax deductible, nothing else. But if you've got your SIM only agreement in your own personal name, then you cannot deduct that because you'll be paying for that anyway. So the fact that you're using it for business is neither here nor there, unless you've got additional costs and you can show that they purely relate to using that phone for the business. But what you can do is actually, if you've got the handset, you can sell the handset to your limited company at the market value when you start using it, and the company can either give you the cash back, as would happen if the company bought that phone from a third party, or otherwise you can just go to your director's loan account, build that up, and you can take that out tax-free at a later date. So if you're using your home as your office and you've just got internet, if you've already had internet in place, you cannot claim a tax deduction for this because all internets these days are pretty much unlimited. So you can't claim it there. But if you had a line specifically installed for using it for your business, then you can claim these additional expenses. But you just need to be able to show that these expenses were incurred additionally to before, similar with the mobile phones. Another fantastic tax deduction is all about pension payments as well. So if you're a director, employee of a limited company, that company can make pension payments to contributions towards your pension up to £40,000 a year in most cases. This is fully tax deductible for the limited company, meaning you get corporation tax relief at 19% currently, and the funds then go into your pension where they can grow tax-free. Also, another fantastic tax tip is professional subscriptions. So if you're a member, such as an accountancy body, you've got a guild or a professional association that you're a member of, all of these subscriptions are tax deductible because you're incurring them in order to provide services to the public. Training expenses. We often get asked this, are training expenses tax deductible? Well, the key here is whether they relate to you learning a completely new skill or just merely improving or updating an existing skill. So if it relates to you, say for instance you're an IT contractor and you learn plumbing, because they're clearly different skills, all of those costs that relate to you learning the trade of plumbing are deemed capital because they're building an asset, and as a result they're not tax deductible. Whereas if you already are a plumber and you're just doing an update course or a trading course or trying to improve your knowledge, then that would be a tax deductible expense because you're building on the already existing knowledge. And one final last deduction before we end the video is all about using your home as office. I mentioned before you can claim for the broadband if you've had to have extra lines put in. Now we'll talk about use of home as office. So if you're using your home as an office, you can claim £6 per week as a flat rate deduction. So if you're using any of the rooms, you don't have to keep track of this. Just using it using your home as an office, you can claim £6 per week. The company can reimburse you this either monthly as part of the payroll, or it can go to your direct loan account. So I really hope you've enjoyed this video of what kind of expenses you can deduct from your limited company and save some tax this tax year. Please do hit that like button if you've learned something from this. Thank you very much for watching. Bye.